We cannot succeed without obsession. We always have to be prepared for losses, as losses are part and parcel of stock market investor life. On this very note, namaste and good evening to all the dignitaries today. I, C. Ashita Shah, extend a very warm AQL to the dignitaries on today's session under the aegis of the Committee on Financial Markets and Investors Protection ICAI, which is a non-standing committee of ICAI. The Committee on Financial Markets and Investors Protection provides suggestions on various bills, notifications, circulars, and other documents related to financial markets to the government and regulators. Besides this, the committee regularly interacts with MCA, RBI, SEBI, Insurance Regulatory and Development Authority, Forward Markets Commission, and stock exchanges on the issues relating to financial markets, role of CAs, and investors' protection. The committee creates awareness amongst the public at large and ensures investors' protection. It also enhances skills of members by conducting various certificate courses and disseminates knowledge by way of various virtual CP meetings and webinars. So let me take the pleasure to welcome you all to one of its kind webinar on role of CAs with SEBI Intermediaries. A true leader is one who knows the way, goes the way, shows the way. Such is the persona carried by our chairman, Committee on Financial Markets and Investor Protection, ICAI, CAS Nanas. CAS Nanas, Sir, Council member in the 25th Council of the Institute of Accountants of India 2025. Presently is chairman of Committee of Financial Markets and Investors Protection, ICAI, Digital Accounting and Assurance Board, ICAI, Committee on Information Technology, South Asian Federation of Accountants. He is Vice Chairman, Board of Internal Audit and Management Accounting, ICAI. As member of Central Council of ICAI from 2004 to 2016 and 2019 to 2022, he is member of Quality Review Board set up by Government of India, member of SEBI Advisory Committee on Primary Market from 2007 to 2010, and Committee on Mutual Funds 2007-2010, and represented ICAI on SEBI Committee on Disclosures. He has been convener of the expert group constituted by MCA, member of SAFA, chairman of NIRC from the year 2002 to 2003. He has contributed as guest lecturer on various topics. With this, we welcome you, sir. Over to you.
Thanks a lot, Ashita, the Honorable Vice Chairman of the Board, the Speaker, Honorable Speaker from Bangalore, the moderator, and all people who have come here to go home more alike. Ladies and gentlemen, God is kind that my flight got delayed and I could speak to you for a minute. The flight is about to board, so I have to say goodbye. I wish this conference a great success. Brother Kotha is there. He will take you through all the regulatory aspects which needs to be followed in capital markets. But I have one very strong feeling. People who are regulated are people who succeed in life. Indian bourses after 1992, when SEBI came in, things became regulated and today we are rated amongst one of the best international bodies which facilitate trade, which ultimately regulate the entire profession. So not speaking much, I would like to withdraw and hand over the dais to Madam Ashita for further proceedings. Thank you. Thanks a lot.
That sir lives a life full of humility, gratitude, intellectual curiosity, and never stop learning attitude. Please accept our heartfelt gratitude for sharing your insightful and valuable discernment and encouraging our participants. Moving on to the next segment, we have with us Vice Chairman of the committee, CA Kotha Srinivas sir with us. I take the privilege to invite you, sir. Sir is Central Council member 2002 to 2025 of ICAI. He is a partner of SSB and Associates Chartered Accountants, Bangalore. He has served the institute for over 2 decades. As a student committee member, he has served as a member and secretary of Students Association. He was chairman of Bangalore branch during 2009 to 2010 and chairman of SIRC during the year 2017 to 2018. He has presented papers at various study circles, meetings, workshops, seminars, and conferences on topics covering direct tax and international taxation. He was visiting faculty at ICAI Bangalore, authored a book named CA Referencer for Chartered Accountants, which was released by Bangalore branch of ICAI as Study Circle Series booklet. Apart from above, he is life member of Karnataka State Chartered Accountants Association. With this brief introduction, I request Srinivas Kotha sir to give his insights. Over to you, sir.
Thank you, Ashita, and I welcome Sudhindra DS, the speaker of the day. I also thank the chairman, Charanjot Singh Nanda sir, who is traveling, so he couldn't be with us. And I welcome each and every participant for this particular webinar. As you know, this committee, I think about the committee, Ashita said in her opening remarks, what all the activities we do. Apart from that, one more activity what we do is this webinar series of webinars. Every Saturday, we will be conducting. And most of you may be attending that. And from today, we started 2 certification courses on the committee, so which has started from today. And there are 2 more certification courses which will be starting in the next week. That is from 27. I hope members will make use of these particular activities and enlighten yourself on the financial markets. In fact, when we see these traditional practices are dwindling or coming down, we have to, as chartered accountants, look into various other areas. And one of the areas which you can look into is this financial markets. Of course, Institute has given permission for chartered accountants having COP to do this trading in this futures and market, futures and options. But still, we are not given permission to chartered accountants for trading in shares. There was a talk or discussion that's happening. Maybe if the council feels that yes, we can allow members to do trading in shares also, that will also be a new area, not only for your benefit, but also we should see how we can make use of that particular thing, and we can guide our clients as such. Today, one of the topics which Sudhindra is speaking is what are the roles of CAs and what are all the things that a person has to do in SEBI regulations, SEBI intermediaries as such. In fact, there are various aspects, like when once you talk about wealth management, there are something like portfolio managers, and where they will take manage the funds of a client. So they invest in various securities, mutual funds, equities and all. And what all the procedures they have to follow, like what are the procedures they have to follow, what are the guidelines they have to follow with SEBI. And as a chartered accountant, what are all the opportunities? Maybe at the end of the session, we may have certain slides which can tell, as chartered accountants, what we can do. We are talking about SEBI intermediaries, which we cannot do as chartered accountants, practicing chartered accountants. But as chartered accountants, what all we can do, where we can handle this PMS people, or we can handle our clients, what all we can do, whether it will be consultation or it may be audit, accounting, whatever we can do. I think he will take you through all those this thing. With this introductory note, I wish happy learning to all of you. In fact, maybe some 5 to 10 days back, maybe we had one occasion where Sudhindra spoke about these things in brief. So I asked him whether at the national level, he immediately agreed, and I spoke to the chairman, and chairman also agreed immediately, and today he is there. If any one of you are interested to speak on this capital markets, where you have knowledge, a different knowledge, kindly inform us. There is an email ID, cfmip@ica.in. Please write to that particular email if you are interested. Maybe your name, the place, membership number, and the topics which you would like to speak. Any opportunity is there, definitely we will take that and provide an opportunity for all of you. Thank you, Ashita. I would like to hand over the proceedings back to you. We can go to the session. Thank you.
Gratitude is a quality similar to electricity. It produces, discharges, and must be used in order to exist for all. Thank you very much, sir, for sharing your words of wisdom. After this amazing motivation from our chairman and vice chairman, sir, our participants are all the more keen to experience this electrifying evening. So, moving on to the next segment of the evening, we have with us our point man for the evening, CA Sudhinder DS, with us to share his knowledge and wisdom. He is a practicing chartered accountant with 6 years of experience post qualification and is a partner of Pratik and Sudhindra LLP Chartered Accountants. He has done his diploma in information system audit, certificate on blockchain technology for professional accountants conducted by ICAI. He also holds certificate course on concurrent audit of banks conducted by ICAI, securities and share market regulatory monitoring, complaint handling, and economic aspects of ICAI, NISM series. He has experience in SEBI registered intermediaries, fintech companies related to payment solutions and wealth management. He has wide experience of SEBI registered intermediaries. He has performed various functional consultancy for the product development of an ERP system with fintech companies. He is consultant for a startup for defining controls, advising on RBI regulations. Apart from above, he has assisted in implementing GST for the clients in real estate and manufacturing sector. GST training to the employees of various Karnataka government-owned companies, Niravari Nigams. With this brief introduction, I take the privilege to welcome Sudhinder sir. Sir, over to you.
Yeah, thanks for your introduction, Ashita. And I would firstly like to thank Nanda sir and Kota Srinivas sir for giving me the opportunity. Yeah. So let me share the screen. Yeah. So before we get into the presentation, let me give you the context on what we are looking in today's webinar. The moment, or generally the what I have experienced is when I see SEBI, I've consult or advise people who are working as SEBI intermediaries. The first question is it listing obligations? Do I advise on where to invest, or do I advise on share markets? It's a no for all. So what is that we are ideally looking at? So there are intermediaries. The ones which we are generally aware of is like the AMCs, the mutual funds, the brokers. And now the new age due to startup ecosystem, we are able to see the AIFs. Those are the venture capitalist funds. The other set of intermediaries which are there for quite a period of time are the investment advisors, research analysts, portfolio managers. This is where we are looking in detail on what these regulations are, what the person registered as an investment advisor, as a research analyst or a PMS can do, cannot do, how he can do, and at the end of the day, what is that we take away as a CA? One, maybe as if we want to get into that business, or if we are practicing and if we want to advise, consult them, or on the compliances, where is that we can get in? So this is the broader view on the webinar going further. So as Nanda sir in the beginning rightly said, wherever there is regulation, there's where we can see the growth. So that is something which we need to agree with. If we are able to see the growth in a stock exchange, in the stock markets today, it's because of the regulations which are in place. There are few, from the time if we take it from Harshad Mehta, 1991, 93, there are few scams which have happened where there are few non-compliances which have been done. but SEBI has acted on it. They have responded. They came up with regulations, they fixed those loopholes. With technology coming in, it has become much more challenge. So with the change in technology, the regulatory is also changing. The regulations is changing. And thanks to the current chairman of SEBI, where the pace at which we are able to look at the regulations coming in more, the frequent notification circulars are coming in are tremendous, which is the need of the hour today. So this is where we can see there is regulatory taking steps to ensure that the investors are safeguarded. Unlike what happens in our tax regulations or tax laws is that we see at the interest of the revenue, whether there is any leakage or loss of revenue. Here, it would be at the whether the investor, either maybe a retail investor, HNI, or the foreign portfolio investors, anyone, whether they are safeguarded. So how they may get cheated? One is where the trading activity is not in place or not in line with the required thing, or maybe where the person who are advising or not just following what they should do. On one side, we have insider trading, restriction on insider trading, and yesterday we came up with one circular saying on going a step further from the insider trading. So we can see this. There are frequent measures which have been taken. So now let's come back to the topic on role of CS with SEBI intermediaries. To begin with, we could say the era till now, maybe we can say from early 2000s, is where we were able to see the revolution in IT industry. The boom was in IT. Now, the boom or the growth we are able to see in the fintech space. So when we have a broad breakup on the fintech space, the first is where we have already seen the payment solutions. We have seen all the Google Pay, Phone Pay, Paytms, Bheem, thanks to NPCI for that. Is where the payments, the revolution at which the technology revolution at which it has happened in the payment and settlements is tremendous. Nowadays, we hardly see where we need to wait in the banks to present our checks, to collect money. Much of things is being digitalized. The next is on the lending and deposits. So there's where again we are able to see a couple of startups in this space who are working independently or working with banks and working on the lending side. The other side of the fintech space would be the wealth. So traditionally, wealth management was purely on a relationship basis. They used to do it manually. Now it's completely moved to tech. Or I could say most of the intermediaries are moving from manual to tech. So how does that impact us? See, whenever there is technology coming in place, there are a few vulnerabilities. And there is technology which says they can do something, and we have regulatory which says you need to do something. So as we understand business, and if we are able to understand technology, and we are anyways understand the regulatory side of it, we will be able to have a better combination of all these factors and able to deliver to the clients at much maybe faster. And when we look at it from a pricing point of view for a client, it would be much more reasonable rather than having 2 or 3 consultants of each domain to have a single consultant who consolidates all. So now let's see what's the growth in the financial markets. So the reason why we need to understand this is from COVID, I think most of us will agree that the participation in the financial markets has increased. Maybe they were able to save money, or we have seen a lot of influencers who started advising people where where they can invest, or in the first place, why to invest. There are negative sides of them. Let's keep a part of the influences. But when we look at the positive side, is where the due to them is where we are able to see the retail participation. So how does this impact? So the moment there is more retail participation, that's where the demand side comes in. So people want to invest, people want to save, people want to trade. So the difference between trade and invest is where you invest for a good amount of time. Say you invest today and you wait for next 6 months, 1 year, or more than 5 years. You don't want to withdraw it. Or trade is something where now you invest today itself, you sell, or tomorrow, or within a month. That's where the trading activity, that's where the buy and sell, the frequency would be more. So the moment the demand side is more, obviously we could see the supply side should increase. So that's where we come from economics there. So we are able to see the number of intermediaries are coming up more. Even to take a step further, we could say the way they were doing business, it's evolving because of technology. How was it evolving? Earlier, we could say, take an example of a broker. Today, we can see discounting brokers, Zerodha, where they charge very minimal per transaction. But earlier, when we see even maybe around 8 years back, prior to 2015, the charges were somewhere like a minimum charges, like brokerage of per transaction around 25 to 30 rupees per transaction, or some percentage on the transaction value. But now that is getting reduced. The reason, there is a demand for it. And today on the VC world, I think 2 weeks back, we had one of the sessions beautifully taken on walking over through the AIFs, how the AIFs work. So they have increased. Here in the slide where we can see the investments in AIFs have increased from 361 crores to 3.11 lakh crores, which is a 861 times jump. The reason, one, maybe the investment in the startup ecosystem has increased, or the investment in the hedge funds have increased. Not going much in the AIFs today, or looking at the investments in the mutual funds. So firstly, when we see AUM, it stands for asset under management. So in mutual funds, it has increased from 8.26 lakh crores to 39.62 lakh crores over a period of 10 years, which is an increase of around 380%. In case of a PMS, including the investments made through EPFs. So it has increased from 6.17 lakh crore to 27.79 lakh crore, that is around 350%. So this definitely significates the participation in the financial securities is going to increase. So more likely the supply side will increase. So, but as a consultants, whether we'll be able to monetize it is where we need to look in. So when I say monetize, come up to the regulations, advise to the clients, to do this, you cannot do this, or this is how you need to do. So again, before we get into each of the intermediary, the perspective at which we need to look at the regulation is, one, it's to safeguard the investors. Other is where SEBI says how you need to do. See, generally, when we meet with our clients, we see them, or take an example of a wholesaler. Say, let's take the example of laptops. If he's a wholesaler, he will decide who the customers are. He will decide who his vendors are. He decides where he needs to sell, what is his market, at what price he needs to sell. If demand is more, he can just increase the prices. But when it comes to SEBI intermediaries, SEBI says what you can do, what you cannot do. Something which you can do, so then it comes up like how you can do it. What are the documentation process which is involved? What are the other process which is involved to do this activity? How much fees you can charge? At what interval can you charge? Can you charge fees in advance, or can you need to charge fees after you complete the service? This is something where SEBI mentions about it. And I think again yesterday there was one of the seminars where, one of the consultation papers where SEBI mentioned on tax expense ratio for mutual funds. So on every place, SEBI is looking at there should be no more commissions paid. There should be no. No. Let me put it like this: there should be no like excess commissions paid, excess management fees taken, excess advisory fees charged from the clients. So to safeguard all this, at the end of the day, to safeguard the investors, SEBI is coming with all the regulations. So now let's start with, on a broad based, what are the type of intermediaries where we have? So when we classify in fund based and non-fund based. So non-fund based is where we get investment advisors and research analysts. Fund based, we get portfolio managers, AIFs, brokers, AMCs, asset management companies, or the mutual funds and foreign portfolio investors. So today we'll be mainly looking in investment advisor, research analysts, and portfolio managers. So firstly, let's see who is an investment advisor. So any person provides investment advice to clients or other persons or group of persons for a consideration. Is an investment advisor. So what role do they play? Educating clients on various ways to accomplish their financial goals, analyze investment options and determine risk tolerance, provide investment recommendations. Let's forget the definition and let's put it in a simple language as what does these investment advisors do? So typically today we are able to see a couple of type of investment advisors, like one who acts as a family office. So entire members of your family will be the client of that particular investment advisor. He manages the complete investments. So probably he will invest in a PMS, he will invest in a AIFs, he will, when I say he will invest, he will advise. So he will advise to invest in a mutual fund, or he may even advise to invest in a PPF, depending upon their corpus. So what is the basis on which he does? So whenever the investment advisor advises, he is mandated to understand the risk profile of the client. So these are the things which we go in detail. So what does the risk profile in general mean? So risk profile means, say, I'm not very much comfortable investing in share markets. I'm comfortable investing in FDs. Even if I'm getting 6%, 7% rate of return, I'm comfortable there. Or I have a friend who says he doesn't like to invest in FDs. 7% doesn't motivate for him to invest. He looks at more than 10, 12, 14% as minimum rate of return for him to invest. So based on their risk-taking capabilities is where they need to invest. The investment advisors advise where they need to invest. The other factor which they need to consider is what are their financial goals? Say I have a goal. After 3 years, I need to get married. After 5 years, I need to construct a house. Next 1 year, I need to take a car. Every 2 years, I go on a foreign trip, which costs somewhere around 5 lakhs a trip. So these are my financial goals. So they understand it. Then they come up with their set of recommendations. So coming back to the definition, any person provides investment advice to its clients or other persons or group of persons for consideration. So next, we'll see what is an investment advice. So any advice related to investing in purchasing or selling or dealing in securities or investment products or investment portfolio containing securities or investment products. It can be either oral, written, or through any means of communication. Yeah. So here again, it can be any of the financial products. It can be mutual funds, corporate bonds, NCDs, non-convertible debentures, PPFs, derivatives, equity shares. You are, if an investment advisor advising in any of these products, it constitutes as an investment advice. Maybe you give advice on just to invest here or to hold on it or to sell it. All constitutes as an investment. And it can be either oral or written or through any means. So even if you send a WhatsApp message or even if you are sending in through email, telegram, everything constitutes as an investment advice. And the important point which we need to know here is an investment advisor can only advise and cannot take position on client's behalf. As in, you advise the client saying in next 1 week you invest say 10 lakhs in some blue chip equity funds. So your role as an investment advisor ends there. The decision whether to invest or not, it lies on the client. If the client trusts you, if the client is confident on his advisor, he will invest. Otherwise, he may speak with the other advisor and he may go there. So investment advisor can only advise, and you cannot take position on your client behalf, or the advisor cannot say that you give me the access, I will do the transaction on behalf of you. No, that execution of the transaction is mainly the sole responsible of the investor or the client. As an advisor, the role would be restricted only to advice. But to facilitate advice, they may give the support to execute, but he cannot mandate any execution or implementation. So the third point here on advice is where investment portfolio containing security or investment products. So nowadays where we are able to see there are through few platforms. So example, we can say it as small case. So firstly, a disclaimer is where or any example which I'm taking is mainly to correlate how those products work or how the platform works and nothing to do with their promotions. So when we say a small case, so there is a platform and there's an investment advisor. He lists his portfolio. We call it as a model portfolio. Say in 100%, he gives 30% towards equity shares, 20% towards mutual funds, 30% towards mutual funds, debt funds, and balance 20% towards gold ETFs or just an ETF. So this is called a portfolio of products or portfolio of securities or model portfolio. So thus, ideally, this platform, see, if as an advisor, if I say I need to sell shares of SBI and purchase shares of Infosys, it has to happen at that point of time. If I advise today and if the client is executing after 2 days, technically, by the time he executes, the purpose at which I as an advisor would have recommended it would have gone off. I would have recommended to sell it at 350. But the time which he executes, it may gone up to 320. So the purpose doesn't get solved. So that's where these tech platforms play a role, is where I just change the allocation and the advice and the client can just accept it and the trade is done. Trade is executed. So these are the ways where we were able to say how the executions, how the tech is enabling the advisor to play at large. Earlier, if he had to communicate to 100 clients, he need to call up them, he need to send an email asking him to do this, then send up a reminder email asking him if he has executed. Here, it's just he changes his allocation in his model portfolio and the moment client accepts it, that trade gets executed. This is the way where technology is playing a prominent role. So since I brought up on the where tech platform, so now again SEBI has come up with and said that they would be coming up with a regulation for execution only platforms. So there are few platforms where they get integrated with AMCs or BSE Star, where you deal with the mutual funds. So ideally, they would integrate with multiple banks where you can invest in a FD, redeem an FD, or with few other companies where they issue NCDs. So there are a few execution platforms wherein today those platforms are not regulated. They can decide the terms at which they want to do business with, either with the investor or with the intermediary or with the issuer. So SEBI is coming up with a regulation. So we need to wait and watch what those regulations says. So giving reference to my earlier point, saying that with the change, the way tech is evolving, the same way the regulations are also evolving. So that's where when there is a change in regulation, there is a requirement for those intermediaries or for those people who are in that business, advising them on what has to be done. And there are a few scenarios which is not advice. Say, suppose I write a newspaper article or I speak in a news channel, business news channel, saying the markets are going to do better. The technology, looking at the current phase in the markets, the IT sector is seeing, or maybe foreseeing that there are revenue losses which they can foresee, or where they get hit on the businesses. So most likely, I would give a saying that the IT sector is bleeding. The IT sector stocks may come down. So these are the advice given through in general. So this doesn't constitute as an investment advice. So, and now there is something called advertisement code being issued by SEBI, which is applicable from 1st May, but there are a bit of ambiguities. So I'm not considering that particular circular into our current discussions. So if you're giving anything to public at large, that doesn't qualify as an investment advice. Then we'll see who can become an investment advisor. So it can be an individual or a non-individual. So the classification, what the regulation looks at is individual or a non-individual. So who are the ones in non-individual? It may be partnership firm or company or a limited liability partnership. Those are the LLPs. So again, here SEBI also mentions the criteria. Who can become an investment advisor? So if they need to become an investment advisor, what are the qualifications he needs to have? What are the net worth he needs to have? What is the certification? Is he required to have any work experience? So these are the things which, again, regulatory mandates. So for an investment advisor, he needs to have 5 lakhs of net tangible assets if he is an individual. And for a non-individual, he needs to have, the entity needs to have 50 lakhs of net worth. So this is again modified from 30th September 2022. So before that, it was at 1 lakh and 25 lakhs. So now it is at 5 lakhs and 50 lakhs. So partnership firm need to have a capital of 50 lakhs. Company, what does the net worth mean for a company? It's the paid up capital minus all the profit and loss debit balance or few other deductions, which again the regulation mentioned. So whenever we look at here, maybe as at what on the tangible assets or on the net worth, regulation defines how to calculate or how to compute net worth. Each regulation, the investment advisor regulation define something. The portfolio manager regulation says what does the net worth is. So whenever we are giving a net worth certificate saying the net worth of this investment advisor or this PMS is so much, we need to always refer to the regulation of that particular intermediary, and we cannot go to the AS there. So what are the criteria? So what happens here for an individual investment advisor, he would be as the same advisor and the principal officer. But what if it is a non-individual? If it's a partnership firm, or if it's a private limited or a public limited company, or if it's a LLP. So there where we get a principal officer. So that's basically that a principal officer who acts as an investment advisor on behalf of the entity, on behalf of the firm, or on behalf of the company. Then we have a persons associated with advice. So if there are any other person associated with the entity, say if I am an individual, I hire another person to work with me to speak with the clients, and I tell him you give this recommendation. So typical case of how we work with the paid assistants of the articles, where we tell them as these details to the client, and tell these client to make these changes, pass these entries, make these changes in the financial statement. So in the same way, these advisors also have people to work with them. So there are certain criteria on what are the qualification and experience these people whom I employ to provide investment advice should have. So firstly, coming to the principal officer, the qualification of the principal officer has to be a professional qualification like CA, CS, CMA, or a PG degree or diploma in commerce, business, finance, or a CFA, Chartered Financial Analyst. So he needs to possess any of these qualifications. Then he needs to have a work experience of at least 5 years in the relevant field. So 5 years, so it can be you're working in another investment advisor, or you are working with a portfolio manager, but it has to be on research or advising the client. It cannot be like you work with a broker on the back end office and you say, I have experience working in the back end office. That doesn't get considered. Or you say, I was a compliance officer with a PMS for 10 years, so I know how the advisor picks up a security, or how the advisor does his financial planning. No, it has to be on the advisory. And certification wise, either he has to get NISM. So when I say NISM, it's like there are various modules of NISM exam or certifications for each other type of intermediary. For example, if I as a CA, if I need to do audit of a broker, I need to have a NISM, I'm not sure on the number, a separate internal audit for stockbrokers. That's something which I need to clear. If I need to do internal audit for a stockbroker under the depository regulation, there's a separate NISM certification which I as a CA need to do it. Otherwise, I'll not be able to take up those audits. So coming to the investment advisor, it is 10E and 10B. There are two modules which the investment advisor has to clear. He has to clear both the modules, or he has to be a certified financial planner. So that is generally given in India by Financial Planning and Financial FPSB, we say, Financial Planning Board, is where that board author gives the certification of a CFP. They have a separate curriculum. You need to clear the exams. So, and the NISM exam is typically valid only for a period of 3 years. So every 3 years, the principal officer needs to write those exams, clear it. Otherwise, like he cannot act as a principal officer. He needs to have same qualification as a principal officer, same certification as a principal officer, but in terms of work experience, a relaxation period of 2 years have been given. So the major challenge today the industry are facing today is, so even if I have a CFA, chartered financial analyst, which is considered as one of the premium certifications or premium qualifications in the financial world. If he doesn't have any work experience, then I cannot employ him to give advice. So that is one of the challenge which today the industry is facing. So who is the principal officer and who is a person associated with advice? So principal officer, so he has to be a managing director, designated director, or a managing partner or executive chairman of the board or equivalent management body who is responsible for the overall function of the business and operations of non-individual investment advisor. So to keep it simple, I incorporate a company, I hire an employee who has all the qualifications, work experience of 5 years, the certification of, say, NISM. But I take him as an employee. Can he be a principal officer? No. The principal officer has to be in any of these ranks, either as a MD, designated director, managing partner, executive chairman of the board, or in the management. So ideally, SEBI is looking at, see, earlier the practice was like they set up a company, hire an employee who has this qualification, take the license, and they didn't have a say in the company of decision making. So now SEBI has ensured, taken a step further to say the principal officer has the decision taking authority in the company, has the decision to take, involved in the operations, to say what the company needs to do. Otherwise, he cannot be called as a principal officer. And if he cannot be called as a principal officer, then you cannot make an application to SEBI at all. So when you say as a person associated with advice, so that the definition includes any employee who are facing sale, who are facing clients, like sales staff, relationship managers, or person associated with advice. And if they're doing just clerical works, office administrative functions, say if there's a person who sends you an invite, meeting, schedules an invite with the advisor and you as a client, he cannot be called as a person associated with advice. He's just doing his basic administrative functions. So in fact, the definition includes client relationship managers and service relationship managers as well. So this is where SEBI is looking at. But today, still we are able to see, or a typical example is where we can see, we get a call saying, sir, do you do trade in financial markets? Do you trade in equity? If you say yes, then they say, we are from this company, we provide this service, subscription service, we provide, you invest here, you get so much percentage of return, this is the minimum amount of investment. These are clear violations. If one, they can't give those promises, and on the other, those employees need to have these qualification, work experience of 2 years and certification, because they are sales staff, they are facing the clients and they are advising. So those people need to have those need to comply with those criteria today. So as I mentioned earlier, in the very instance when we started on the financial or the investment advisors, so one business model is where they do is on the complete financial planning. The other one is where they say you just invest, advise you in this security, wait for this hold period, you sell now, on those things. So what are the compliances which an investment advisor needs to follow? So this is where now we get into the details of understanding how they do business. So what are the things they need to do? So suppose tomorrow, if you get an investment advisor as your client, or you have money, you don't know where to invest or how to invest, you go reach out to an investment advisor. So working with him, these are the things which the investment advisor needs to follow. One is the risk profiling. The suitability, needs to maintain records. He needs to segregate its advisory and distribution. And last what we have is implementation and execution. So we'll get into these details. So roughly, it's like the process would be like a client comes to you, say, suppose you are an advisor and I am the client. I come to you. You ask few set of questions, understand my risk, and say you are able to take a risk of 60%. You are very risk averse person. You can't take risk. You can invest equity of only 20%. Rest should be in debt, fixed deposits, corporate bonds. Then you say each how you advise the clients, how you need to maintain the advices which you provide. What are the details which have to be maintained in those advices? In the first place, how you get an agreement with the client. Then we have advisory and distribution. This is where significantly if you're a mutual fund distributor, where we have two type of funds, either a regular fund or a direct fund. So if you need to invest in a direct fund, you need to go through an investment advisor, or you can through with execution only platforms today, you can invest in direct funds. Then implementation and execution. So if you need to execute a transaction, how does that happen? What an investment advisor can do or cannot do in those scenarios. So risk profiling and suitability. So to have, so this is something where I think most of us would have come across with many apps in the market today saying you answer a set of questions and you say this is your income, this is your expense, this is what you can invest, these are your goals, and they come up with a recommendation. So now it's just a small illustration on how the risk profiling happens. So I hope you're able to see the screen. So this is where this is a risk profile questionnaire. So they start with from very basic, what is your age? What is your income? Then they ask, do you have any saving? Do you have any employee benefits, excluding your house? Number of dependents. So, and this is just an example. So each advisor has his own way of doing it. So if you want to invest, what is your time horizon? And do you have a job? Is it secure or is it not secure? How good is your knowledge of finance? And this is where they try to understand the way you look at the markets. Say you invest today and the shares go down. How do you react to it? So this is where they try to understand whether you're a risk taker or a very risk averse. How is it? Then we have another question asking, you win 10,000, what do you want to do? Do you want to bet that, or you just keep with it? You want to take risk, and when you take 50% risk and want to earn 30%, or on a 25, or you just have a probability of winning 25% but you can earn 75,000. So again, this is where your perspective comes up. So whether as an investor you are ready to take more risk and more return, or less risk, less return, or how are you balancing it? So then few others, a couple of questions. So what describes you the most? Say like if you make an investment, do you find it as just as an investment, or you find you're satisfied with the content, or you invest and you start worrying, okay, you have invested, what will happen? So based on that is where one of the criteria comes up. So the other couple of questions, like if you would have invested in a company that underperformed in the past and caused you a loss, so would you want to invest, say 5 years? Maybe a few of the examples where we can take, say today, Reliance Power or Reliance Communications has gone into a toss. Tomorrow, if there is some magic happening and if the company revamps, so do you want to invest in it? So these are the types of questions mainly to understand the behavior of the investor, the perspective at which he looks at the financial markets. Because what happens in most of the cases is, I as an investor, I say, no, I'm ready to take risk. But looking at these questions, my behavior changes. So once I answer these questions, then they come up with saying, so equity asset allocation is somewhere between 40 to 60%. So my risk profile is very moderate. I am not a very conservative, or I am not a very risk aggressive, or I'm not a very risk taker. I'm moderate. I need to have a balance between the risk what I take and between the returns what I look at. So based on that is where the advisor says 40 to 60% is your risk taking ability. So today these things are done maybe manually, like where you fill up the form, he does it manually. Or most likely there are tools, they have built their own tools today. They come up with this type of questionnaires, you answer, and they arrive at this risk profile. So what? So once this is this is how a typical risk profile questionnaire works. So let's go back on the what the regulation says. So risk profiling means it's basically a set of questionnaires to understand the risk appetite. What is my tolerance? Do I have any liabilities today? Do I have the capacity to observe losses? Am I willing to accept the risk of loss of capital? Say if I'm a risk averse, you say you invest in options for 50,000. I may not be comfortable with, because either it's a boom or it's completely gone. The probability is 50%. But you say you invest in a equity fund where the loss of capital may be 5% or maybe 10%, or you invest in a debt fund. So let's forget the example of Franklin. Let's not consider the way debt funds are also risky. I agree with that, but traditionally, or the way we look at it, is equity as risky and debt funds are less riskier. So if I may be advised on a debt fund. So basically risk profiling is a set of questionnaires. What they do, they understand the risk appetite of the investor. If they understand any borrowings, if they do they have, how much income do they earn? Because at the end of the day, if you're not considering the borrowing, you say I earn 30 lakhs per annum, and I don't disclose that I have a 20 lakh loan. What happens is the advisors come and say, okay, you have a 30 lakh of income, you have an expense of say 10 lakhs, you have an investment amount of 20 lakhs, invest 20 lakhs in this. Invest 20 lakhs in 5 lakhs in equity, 8 lakhs in fixed deposits, 3 lakhs in mutual funds. So ideally, whatever the investment advisor he provided, I cannot follow it because I don't have so much surplus money. Because 20 lakhs goes away as my EMI, and 10 lakhs is what is left with me, and I need to take care of my expenses as well. So I, as a client, I need to disclose my actual financial positions. If I'm having investment in any other places, I need to disclose that. If not, where at least the amount. That's where only then is where the advisor will be able to do a proper risk profiling and advise you accordingly. As an advisor, he needs to collect all the information. He just can't say client doesn't provide. The first place it has to be whether the advisor has asked for this information. So once we do the risk, he does the risk profiling, he does the risk assessment. That's where we earlier in the video where we saw 40 to 60%. So the 40 to 60% is the assessment. So that's where communicating the profile and asset allocation. So the advisor says you are a risk moderate. So your asset allocation will be around 40 to 50 or 40 to 60% in equity, rest in the debt. And he is providing advice in line with the risk profile. So he advises 40% equity. So 10% you put in equity shares, 30% you put in equity mutual funds, and the rest 60% you put in debt funds. Or for 40% in debt funds, 10% in PPF, 10% in fixed deposit. So this is how they provide the investment advice. So again, this should something meet the client's investment object. Say, my today's investment purpose. Why I'm making a purpose? Like, say, after 5 years, I need to construct a house. And today, if I'm constructing a house, that costs 70 lakhs. So the advisor, his role doesn't get restricted only to understanding his risk appetite, but he also needs to go a step further and understand what are my financial goals? Why am I looking to invest? It may be okay, it's for retirement, or it may be for any of the financial goals, as I mentioned, higher education of kids, foreign trips. I need to purchase a car, or I need to purchase other land, or I need to start up my own. I need to have my own startup after 10 years, and this is what I need. I need 5 CR as my minimum amount at the time I start my company. So these are the things which the investment advisor need to understand. So once he understands that, he documents the process of complete process. So he understands my risk appetite. He understands my risk or investment objective. Then he documents those things and advises, say, based on your risk appetite, your investment objective, you invest in A, B, C, D securities. And he says, why A, B, C, D? Because your risk covers 40% is in the equity. Your risk taker, 80% is in the equity. That's where the process of selecting financial securities is being documented. So next we have the maintenance of records. So till here, what we looked at is the risk profiling, the suitability. So then we will get into the records. So this is something very relevant for us to know what are the records an investment advisor should maintain. So in the first instance, he needs to have an agreement with the client. So again, can it be a 1-pager, 2-pager document? I decide my own terms, client decides its own terms and get into an agreement? It's a clear no. SEBI has prescribed, if I'm not wrong, somewhere around 35 to 40 points on minimum parameters which are to be included in the agreement. Beyond that, if you want to add anything, you go ahead and add. So all those provisions, all those criteria are to be mentioned in the agreement. So before providing any advice, I as an investment advisor need to execute an agreement with the client. So there were a few confusion whether it has to be manually signed or can the document be signed online? Can we sign it through DocuSign, Zoho Sign? Or can I give just an email confirmation I agree with the agreement? So these are the few of the confusions or clarifications which were sort of. And SEBI has clearly told it can't just be a email confirmation saying I accept to these terms and conditions. That cannot be treated as acceptance from the client. Or I give a checklist. As a client, I select tick, 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 and I submit it. Can that be as an agreement? No. So SEBI has told how an agreement has to be executed. Say if I want to use DocuSign, I digitally sign in all the pages. I read through all the pages. SEBI accepts it. Because I would say, in fact, the IT Act has given provision for where it says giving reference to acceptance of the digital signatures. So that's where we can say that is being accepted. Then the KYC of the client. So I can't just go to random person and give advice, I execute agreement. I need to collect his KYC. I need to do a CKYC compliance. I need to do KRA compliance. I need to upload in the relevant portals, see if there are any, when I say I as an advisor, whether there are any non-compliances by this client, whether there were any defaults, whether if in case he was involved in any PMLA. In fact, today, investment advisors have the same responsibilities as a bank have today on, say, mainly in PMLA cases. So they need to report if they have any clients who have involved in PMLA to SEBI. So that is the level of compliance which is required by the advisors. Then risk profiling and risk assessment. So whatever the risk questionnaire, whatever I answered, and whatever the output came up saying, I am risk moderate, my score is 360 out of 600, my asset allocation will be between 40 to 60% of equity. These are, everything should be documented. It can be either manual or it can be online or it can be e-records. Suitability assessment saying, since I am 40% of comfortable in equity, I advise so and so. The investment advisor advises 30% in equity shares, 10% in equity funds, other 10% in blue chip equity funds or sectoral funds. So this is where the suitability comes into the picture. Then once the suitability is done, then he provides the investment advice. Then he documents the rationale for arriving. When we say, we have, say an example, we have Kotak blue chip fund, that is one of the Kotak. ICICI comes in that category, HDFC comes in that category. So why I am selecting ICICI and not HDFC? These are the other things as a rationale which I need to arrive at. And these records ought to be maintained for a period of 5 years. So any questions till now? Yeah, Ashita, any questions? Or we can move ahead. Okay. So then we have something called advisory and distribution. So let's see how or why the investment advisory regulation came into the picture in first place. See, even today we have mutual fund distributors who are regulated by AMFI, Association of Mutual Funds India. So what they again typically do, they advise or they give recommendations saying you invest in this fund so much. They take for DSP, Mirai, SBI, HDFC, ICICI, Kotak, all those funds. They say you invest so much of amount in 5,000 in this, 3,000, 2,000, 1,000. And for this is time horizons. But over a period is where the role of advisory came up into the role. So I, as an advisor, I would say, why do you want to restrict only to mutual funds? You have corporate bonds, you have hedge funds, you have PMS products where you can invest. So to do all these things, I need to be an investment advisor. If I need to advise on the complete financial planning of the client, I need to have an advisor. But still, what happens is still there is some hesitance or something which I think most of us will agree to, that including the HNIs, HNWIs have resistance in paying advisory fee or the professional fees. So still people are comfortable paying if the advisor is taking commission from the AMCs. They are comfortable with that rather than paying an advisory fee. So SEBI understood this with as a problem and said, as an advisor, you can provide both advisory services and as a distribution services, like a mutual fund distributor. But you need to comply with few of the things. Firstly, an individual advisor, I cannot provide distribution services. Say if I am an individual, I have registered as an investment advisor. I cannot provide distribution services. Say, okay, I'll ask my wife to take up the MFD, then do the distribution services for the same client through her. No, that is not, again, that is not also allowed. So I, as an advisor, I cannot do distribution service. I cannot ask my family also to do, I cannot ask my family to do the distribution service for the same client. So this is where SEBI is ensuring that I don't charge an advisory fee also, and my wife doesn't earn a distribution income also on the same particular transaction. So either the client can come to me or the client can go to my wife as a distributor. Say, what if I am a non-individual? Say I am a private limited company. So how does that work? I need to have two separate departments. One is for the advisory, one is for the distribution. So what do I do there? In advisory, I provide the advice, I charge advisory fee. In distribution, I provide distribution for all the products. But the challenge here is I cannot provide both the services to the same client. Say I have a client today. Fortunately, is where AIFs have been come up with the direct code today. PMS, we have the direct code. Mutual funds, we have direct code. And when we want to see on the deposits, where most of these NBFCs give us the corporate bonds or the NCDs, still they come up into the distribution mode only. There are no direct products. So if I have an advisory client, typically today I cannot advise him to invest in a corporate bond or in a NBFC fixed deposit where I get a payout, because that acts as a distribution and I'm earning income from it. Okay, I say to the best interest of the client, I need to advise this, but I don't take commission. Is that allowed? No. SEBI says, irrespective of whether you take payout from him or not, or you take a payout and pass it, you give it to the client. Irrespective of whatever you do, you cannot do a distribution activity at all. If you are taking a client as an advisory client, or in that case, take the client as a distribution client and do advise him on whatever products you look at and don't charge any advisory fee. So this is where SEBI says. So the client segregation has to happen at a group level. Say I'm a family office. I give advice to all the family members of that particular client. Husband, wife. Let's restrict to that. So can I give a advisory service to husband and distribution service to wife? No. If they are both independent, wife is earning, she has her own set of income, husband is earning, he has his own set of income, then you can provide advisory to one client and distribution to husband and distribution to wife, or vice versa. But if the wife is dependent on the husband's income, then you can't segregate them. So that's where the client segregation has to happen at the group level and at the family level. So also when we go back, when this amended regulation came into the picture in 2020, where most of these banks who had the advisory license, they started to surrender. So why was it? It was of the same reason. What happens is that, say, I have a Kotak bank account. They also provide Kotak wealth management service. They also provide Kotak Demat account. Say, if I'm a client of Kotak Wealth Management Services, they provide me advisory service, investment advisory service. And if they ask me, and I have a demat account in Kotak Securities, ideally when I do that, again they get a brokerage. So that is something which comes into implementation. So we will get into that next. So, but I typically banks. So it's typically restricting the bank to provide advisory service and do the execution through through the same platform, because they're related entities. So that's where we come up at the second point. A non-individual advisor shall have client level segregation at group level. Means group includes holding, subsidiary, associate, or subsidiary of a holding company as per the Companies Act. So I cannot provide advisory service as an investment advisor, and I cannot distribute the mutual funds or financial products as a separate entity to the same set of clients. I need to segregate it. So I need to segregate it family level, husband, wife, kids, and even at the service provider level, whether I am acting as an advisor or I am acting as a distributor. And I need to maintain arm's length relationship. So there's a Chinese wall where advisors services, they provide, that division provides advisory services, and we have a distribution services who provide distribution services. So then we have something called implementation and execution. So what does this mean? As an advisor, I can provide implementation and execution services, but I cannot charge any fees from it. I cannot charge the client, or I refer to some other person and I take a payout from him. That is also not allowed. And I cannot take fee or say I advise it to my other broking entity and they charge some brokerage. That is not allowed. Or even they cannot collect indirect fee. So technically, I cannot collect directly or indirectly for this execution service, either by myself or with my associate companies, the holding entity, subsidiary, or the subsidiary of my holding entity. At any place, at the end of the day, none of these entities should collect money directly or indirectly for the implementation service. And to the advisory clients, I need to advise only through the direct products. So whenever I'm mentioning, like SEBI has mentioned, we cannot do, these are basically, I'm giving reference to the informal guidance. So the same way we have in the taxation laws, like advance authorizations, AARs, we have informal guidance with SEBI. So how does this work here? We say, this is my business activity. This is what regulation says, but I feel this is what it can be done. Can it be done? So the regulator says you can do or you cannot do, or you need to do with this, you follow this. So that's where the informal guidance comes. So in case of Paytm is where they said you can't charge any brokerage, or you can't take any I would say as a payout from any other intermediary for your set of clients. In case of HDFC is where they said, or not maybe it's I think again in one of the brokers where they said, I as an advisor, I advise, but my related entity, say I have a subsidiary entity who has a stockbroking license and they executes it, but they charge a very nominal brokerage as per the stock exchange rules and the broker regulations. Can that be allowed? SEBI says no. Because you cannot, because that is basically like for the execution. What does a broker do? He facilitates trades. That is basically implementation or the execution. So you are ideally charging brokerage for execution of the trade, which is prohibited in the regulation. And the client shall not be under any obligation to avail the implementation service. So other major condition is that client shall not have any obligation. Say, I as an advisor, I say you do this and you can execute the trade. But client at his discretion can decide, I want to use your service or I do not want to use your service. So what are the types of activities which comes under implementation and execution? See, you have a arrangement with one of these execution platforms, or you have a type with BSC Star or other M mutual fund, MFU mutual fund, where you can, through a click of button, the investor can execute the trade. So that is something allowed. You're not charging anything to the client. If you're paying anything to those vendors, then that is your cost. So that is something which SEBI allows. And that is something which is permitted as long as you're not charging or you're not earning consideration either directly or indirectly. So this is just one of a brief video is where you can see how these advices are made. So till in the first part of the video is where we saw the risk questionnaires. The profiling was done. The assessment was done saying I'm risk tolerate. And suitability was done saying 40 to 60%. And next comes is where what are the advice? So this is where starting with as what is my monthly income, then what is my monthly expense, then add my financial goals. I want a car. I want it in Jan 2025. What could be the cost of car today? So it's like basically I'm telling the cost today. Because after 3 years, I don't, or after 2 years, I'm not sure what could be the value, but I'm telling you what is the cost today. So that the advisor himself calculates the normal, adds up the normal inflation rate and says after 2 years, this is the amount which you want. Out of 8 lakh, you can't purchase a car. You need 9.1 lakhs. See, if you want to have a grand wedding, how much money you need, and when you want to get married, or by when you are looking to get married. And also, they're asking here on what is the probability. In case of a marriage, we could say I could get married in next 1 year, or it can be just tomorrow. So we need to give some probabilities. Or case of purchasing a car, I am planning to purchase in next 2 years, but I am fine even if I'm not getting it in next 2 years as well. So that's where the priority goes in. So once I finalize my goals, is where it says, it's just here in this case, it's just asking the what is my risk. This. So here ideally is where then we could have seen the few of the products that is specifically I have blocked it so that let's not promote any of the particular securities. So where we could see the list of securities, ICICI mutual funds, HDFC mutual funds, or you invest in this particular security on those things. Then comes to the compliance. So a non-individual needs to have a compliance officer to ensure that compliances are being followed. So it has to be an in-house compliance officer who needs to be employed by a non-individual advisor. In case of an individual advisor, he need not have a compliance officer. However, in both individual or non-individual, needs to have a yearly compliance audit done from a practicing CA or a CS within 6 months from the end of the financial year. Again, here from past 2 years, SEBI has given the authority to monitor and supervise investment advisor to BASL, that is a wholly owned subsidiary of BSE Administration and Supervision Limited. So that's where they regulate. They see what are the compliances to be followed, the format of the audit report, where they need to submit, the other compliances, when they need to update, to whom they need to update, the email IDs, the frequencies at which they need to update. Those are all those things is being communicated by BASL. Yeah. So a few of the other things which we need to know here is, as an individual, I cannot have more than 150 clients. So how do we measure 150 clients? That is something ambiguous. Say if I have served a client one time, 2 years back, do I still count that as a client? The regulator is silent on it. Whether it's only a client to the clients who I regularly deal, whom I regularly charge fees, are considered as a client. That is something which is not sure. So the moment I cross 150 clients, I'm obligated to go into a non-individual investment advisor. I need to invest 50 lakhs either as a partner in a partnership firm or as a private limited, bring in so much of the share capital and register again as a non-individual investment advisor. Yeah. So any doubts till now? So that we can end the investment advisor and take up the research analyst next.
So we have one question.
Yeah.
What can be the prospects for the senior chartered accountants who want to semi-retire?
So is it okay? So I would look at it as a question as prospect of in as to act as an investment advisor. Maybe if I could say, yeah. The other thing is, institute has permitted that you can register yourself as an investment advisor and provide investment advice, or you are providing, say, tax filing services or tax advisory services to your client, and in that is where you advise them to invest in ELSS or PPFs or NSEs. Again, these are the financial products. So there is an exemption given for chartered accountant. So if you are providing as an incidental to your main practice, today the main practice is tax compliance, tax filing, tax advisory. So if it is incidental to that, you are exempted. But otherwise, if you want to take a registration today, you can take a registration with SEBI and you can do the service.
I think this.
Yeah.
Yeah. Someone is asking what is the eligibility, but not specified eligibility for what.
See, eligibility, it's where we come back to this. Where on the net worth, if I'm an individual, I need to have 5 lakhs of tangible assets and I need to have a professional qualification. CA is considered as a professional qualification. But to determine I have 5 years of experience in the financial markets, that's where how do you justify that? Probably that becomes a bit difficult for a practicing CA unless you have worked with any of these intermediaries. And having the certification, clearing the certification should not be much of a difficulty for a CA. So this is the criteria which if I need to register as an investment advisor, need to comply with.
Yeah, these are the questions. That's it.
Okay. Yeah. So Ashita, do we continue or we take a 2 minutes break and go to the next topic?
Whatever you feel convenient.
Yeah, let's take a 2 minutes break, then
Sure.
let's review.
So we take a 2 minutes break, post which sir will continue with his session.
Okay. So coming back to the research analyst. So basically, what an investment advisor does is very mainly we could, on a one word, we can say financial planning. What does a research analyst do? They give recommendations saying, do you want to subscribe in this IPO? Should you invest in this IPO, or should you buy this security, or if you are hold, or do you need, should you hold this security for a particular period, or should you sell it if you are having currently? So these are the things which research analyst does. So typically how it works is research analyst gives his recommendation, gives his research saying this is what you need to do for, say, an example, you take an example of Infosys share and you say a buy call is given. So based on this is where I, as an investment advisor, okay, this particular security is doing good. This particular mutual fund is doing good. So I'll consider this security and advise my client for next 2-3 months. So this is what I do as an investment advisor. So this is how a research analyst and an investment advisor work together. But unfortunately, today we could see investment advisor acts as a research analyst acts as a investment advisor. So in one of the cases called, again, these are the public documents available in SEBI portal. So where, in case of Stallion assets, SEBI, it was basically a settlement order. So it was not like a notice, you gave a reply and this was assessment done. It was like a settlement order. So Stallion Asset was providing a model portfolio service. So SEBI gave them a notice asking how, as a research analyst, you were able to provide model portfolio service. So what does this model portfolio mean? You have a basket of securities. You have SBI, Infosys, MRF, Page Industries. You have a basket of securities. So, but as in when the markets are changing, accordingly you sell, you buy, or you bring in new securities to invest. So this is like a financial planning, and you're not giving a recommendation of a particular security. How are you able to do this as a research analyst? And in that case, there was no justification or contention raised for that query, and they just went into a settlement and they paid those penalties. So because of this, there is an ambiguity in the market whether I, as a research analyst, can provide a model portfolio service, or do I need to have an investment advisor registration to provide a model portfolio service? So coming in detail, like what does a research analyst do? Preparation or publication of the content of the research report, providing research report, making buy, sell, hold recommendation, and price strategy. So these are the typical activities which regulation or which SEBI identifies as the services which a research analyst can provide. Next, we'll see who can be a research analyst. It can be either an individual or a non-individual. When I say non-individual, it's partnership firm, company, or a LLP. So for an individual, he needs to have a 1 lakh net tangible assets. As in investment advisor, it was 5 lakh. For a non-individual investment advisor, in case of a partnership firm, they need to have 1 lakh of net tangible assets. But in case of company or a LLP, it is 25 lakhs. So ideally, they say in one place, they identify individual and non-individual. In other place, they identify as corporate and non-corporate for research analysts. So for a non-corporate, where individual and partnership firm comes into the picture, for corporate, company and LLP. So here, do we have any restriction in the number of clients if I'm an individual? No. The restriction in the number of clients is only for an investment advisor, not for an individual research analyst. So again, net worth, research analyst regulation defines how to calculate net worth, and it's more or less similar to investment advisor regulations. What is the criteria? So here, it may be for the individual, or if any person hired as a research analyst by the company. So if I incorporate a company, I hire him as a research analyst, and I apply for the registration saying he is a research analyst. So what are the qualifications where that person needs to have, or if I as an individual applying, what I need to have? On the qualification, either I need to have a professional qualification or a post-graduation degree or diploma, and I need not have any work experience. I say I'm just a graduate. What do I do? So then I need to have a 5 years experience. So it's a combination of whether you have a post-qualification and no work experience, or you have a graduate and 5 years experience. And certification of NISM Series 15 is mandatory in both the cases. So when we say again here post-graduation degree or diploma, it has to be in the field of business, finance, economics, accountancy. It can be an MCOM. I don't think it can be an MBA in marketing. Do you recognize that? No, because that has nothing to do with the finance. So this is the criteria to become a research analyst, either as an individual or if you want to register as a non-individual. The person acting as a research analyst should have these criteria, and the company needs to have the net worth of 25 lakhs. So what are the typical, or what are the contents of a research report? So it can be any written or electronic communication that may include research analysis or research recommendation or an opinion. On what basis this has been provided? So it can include comments on general trends in the security markets. Say today we are able to see the IT sector is not doing that great. So that can be a general comment which you can give. Discussion on the broad-based indices. We have various indices, Nifty, Bank, Nifty, IT sector. So those are the indices. I can have discussions on that. That can be a research report. Commentaries on economic, political, and market conditions. See, one of the risks which always, while making a decision, is considered is the political risk. The risk if there is a strong government, the risk if there is a coalition government, the risk if there is a weak government, all those are also considered. How the impact of political gets impacted on the economic and on the market conditions. Even that acts as a research report. Research report can also include, it can be also periodic reports or other communications prepared for unit holders of mutual fund or AIFs or PMF or PMS and investment advisors. See, I am a research analyst. I give a monthly communication or a bi-monthly, a fortnightly or a weekly communication saying this is how the prospect of the market is. This is how, these are the new fund flows, new investments which has come into the market, so much has been withdrawn. This is a sector which is doing well. This is how the economic regulatory side of the particular sector today in the market. So these are the things which I can give it. It can be also internal communications that are not given to current or prospective clients. Then statistical summaries of financial data summaries. See, today I can download the financial data, say past 10 years data I can download. I can compare with the competitors, or I can aggregate those companies and I can say, this is how the particular industry is moving. This is how the FMCG sector, this is how the IT sector, this is how the banking sector is moving. Whether there is additional revenue for entire industries coming up, or whether it's the revenue from one company to other company, it is just moving around. So that is where I can come up with on the statistical summary. Then on the technical analysis, so this is something where most of the current research analysts are with technical analysis, fundamental analysis. So on the technical analysis is where, okay, there is the demand of the security is moving high, the supply is low, the number of people who wants to invest. Say take example of Page Industries, that is Jockey or MRF tires. I I see the number of people who want to sell is less, and the number of people who want to buy those particular securities are more. So that's where the demand supply comes in. Case of Infosys, SBI. So those are most traded securities. IPC is where the demand and supply are, both are more. That's where technical analysis come into picture. They say if you hit this circuit, you sell. If you hit the circuit, you buy. And any other communication which board, so when we say board, it is SEBI, says from time to time, this is what qualifies as a research report. So what this means is, if you qualify, if you fit in any of these points, so this qualifies as a research report. And if you're doing this without any registration, then you're liable for non-registration and penalties. So just for our understanding on how these penalties come up. So there is no saying minimum, maximum penalty mentioned. The penalty could be minimum, like say through this without registration, you were providing service and you have earned 50 lakhs. You repay the entire 50 lakhs. Maybe you could have paid salaries for 30 lakhs, paid rent, your utilities, you are subscribed for other research reports. Nothing is considered by SEBI, and they just say pay 50 lakhs, refund 50 lakhs to the clients. Ideally, you need to identify who those clients are, repay, refund to them. This is the level of penalty which goes up. So this is a penalty for refunding. Then penalty, they come up, say, why you have not registered. So you are violation of this act. Pay so much of this penalty. In very few places where the penalty is quantified, or in most of the cases is where penalty is based on the year, based on the what type of non-compliances, the number of transactions being executed, the amount of revenue you have earned. So based on those criteria. So you may ask, how does SEBI come to know I have provided these services, or I have earned so much of fees? See, today, most of the scenarios where when you get a call asking, I'm providing this service, do you want to subscribe? Pay me 5,000. So all this happens through the payment gateways or through or mainly to say it's the banking channels. SEBI gets in all the bank statements. They evaluate those bank statements, evaluate the credits, put it across to the non-compliant person as in you have received so much as advisory fee, and I'm asking you to refund the entire amount. So this is the level of due diligence which as a regulator SEBI does. And this is needed because to safeguard the interest of the investors. The other perspective as a compliance professionals where we need to look at compliance here is any non-compliance, even a minor non-compliance by these intermediaries will lead to either closure of their business or to huge penalties. So that is a risk of compliance which they carry. That's where we fit in. Saying, if you don't do this, you just need to shut your shop and go. So no intermediary spending so much in their net worth capital, having so much of work experience needs to close their shop just like that. So that's where even the value which the compliance has in this particular sector is high. So in the same way, the risk of the advisors or compliance, even in the audit, is equivalent. So that SEBI expects both the compliance person, the professional, and the company both are aware what compliances are to be done. Otherwise, SEBI goes behind the auditor, asks him the explanation why wasn't this identified. See, today, at least today, we could see in case of tax audits, where in case of few non-compliance, where the officer is identified, it's been asked to the assessee and not to the auditor. But maybe we could foresee that. But currently, this is a practice in the SEBI intermediaries. One of the cases where I have seen is maybe 4 or 5 years back, there were a few non-compliances by a broker. NSE did his inspection and they gave out a order saying you have non-complied these many things, pay the penalty. Client agreed to it, client paid the penalty. So did it end there? No. Then the NSE came up and asked the auditor, you were an auditor, you said all these are compliant. This particular, typically in a stock exchange audit, in the internal audit, I see somewhere around 350 questions are being asked. You need to answer complied, not complied, partially complied, and give the comments for it. Say they have complied, but NSE is identified not complied. They ask you the reason for it. How do you say it has been non-compliant? Do you have the documentation supporting for that? Something similar to the way NAFRA is today. This is where they ask into the audit working papers on what basis was this audit report given, or even in terms of disclosure in the financial statements. So on what basis was this not considered, or why was this not considered as a qualification in your audit report? As recently we saw in case of CCD, Coffee Day, so where NAFRA took the action on the CA. So to that extent is where these regulators are behind. So in the same way we need to ensure. And then this was complained to institute saying this was the non-compliance by this auditor. Take suitable action, then the disciplinary committee initiated its action. So this is where we can see the risk as an intermediary and risk for a professional advising in this. In fact, I think around a week's back, NSE changed the eligibility criteria for the auditor. So earlier, either a CA or CS, chartered accountant or a company secretary could have been there. But today they have mandated only a CA can do. He has to have 5 years experience in the relevant sector. It has to be a partnership firm with 5 partners. Needs to have a certification issued by NISM or ICI. So ideally, all the regulators, the stock exchange, or we can say it as SRO, self-regulatory organizations, they want to ensure that the person doing business and the person certifying they are in compliance of this business, of the regulations, are aware of what they are doing. It can't be like oversight, we have certified it. That's not a case where we can buy. So this is something where I felt as a practicing professionals, which is very much relevant to us. So coming back to the topic of research analyst. So one is on the research report, then few disclosures, which I, as a research analyst, if I'm publishing any research report, need to give. Say, about my business activity, say I have some non-compliances, SEBI inspected, SEBI has levied a penalty. So some disciplinary action has been taken. So I need to disclose that in my research report, saying because of this non-compliances, I have paid this penalty to SEBI, so much of the amount. So this is something which they need to disclose it. And they need to also disclose if they have any financial interest, if there is more than 1% ownership. Say, I am a research entity. There is a company going for IPO. So what I do, I take up, I'm an early investor in that company. I have 5% stake in that company. And I also publish a research report saying this company is good, the sector is doing good, the company can earn so much of revenue in this many years, so you should buy. Can I do that? You can, but I need to disclose this. I need to disclose I have a financial interest in this company. I have ownership in this company. Also, I need to inform, or I need to disclose any remuneration I have earned with this company. Say I was providing some other services to this company, and I have some professional services before they came into listing 6 months back. and I have charged them. So I need to disclose that I have provided this service and I have earned consideration for that. So if it is anything less than 12 months, I need to disclose that. Suppose I have employed a person as a research analyst who was a director in that company earlier, and that company is going into listing and giving a recommendation. Or forget listing, it has been already traded in the markets. And I advise, okay, you need to invest in that particular security, or you need to sell that particular security at this price. Can I do so? I can, but I need to give a disclosure that I have an officer who has worked in this company. I also need to disclose if I have engaged in marketing activity of that company. Say I have another separate wing where I do some marketing activity with that company. I need to disclose that. Or if I made any public appearances on behalf of that company, I need to disclose that. So it's mainly to ensure that one way you maintain a complete distance with the company for which you are recommending, or you give all those disclosures where you are giving any recommendations. Either you do this or you do that. There is no in between way. No, I did a small marketing activity for them, which was very minor. So, and this has nothing to do with the recommendation which I give. So, is that considered? No. That has to be disclosed. See, the value is not the proposition to, or the general practice we have the concept of materiality. Okay, the materiality of this is less, so we are not considering this in our audit. But in this case, the materiality rather than the value of the transaction, what is being considered is the nature of the activity. Even it can be as low as 100 rupees or 1,000 rupees. If the activity is something forbidden, it is forbidden. You cannot just do that activity. Or if that requires that particular activity has to be disclosed, then you need to disclose that. So, and you cannot avoid. See, one of the classic case when I see every time on the disclosure is where we used to hear after any advertisement of a mutual fund, where they used to say in a fast note, mutual funds are subject to market risk. You read carefully all the fund related documents, blah 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 blah. But SEBI went ahead and said it has to be something where people understand it. So the speed at which that was being communicated came down. SEBI also says in few of the places where what should be the font size at which you are giving the disclosure. If you are giving a warning, or if you are saying that investments are subject to market risk, the returns are not guaranteed, you just can't give a font of 5 or 6. SEBI says you need to give a 10 or 11 in one of those circulars. So this is a level of detailing, or to that minute level is where we can see the circulars and notification says you need to comply with this. So we as a consultants or as advisors doesn't get restricted to say you need to advise, you need to give this disclosure. We also need to give where you need to place this disclosure. It can't be just at the last minute ending of that particular document where you give the disclosure. It has to be in that particular place where the regulator asks for it. It has to be at that font. So again, coming to the compliances here. So a non-individual needs to have a compliance officer. An individual, one non-individual, both needs to have a compliance audit being done within 6 months from the end of the financial year. So I, as a research analyst, needs to have a compliance officer. So what does this typically compliance officer do? So looking even from the investment advisor regulation and the research analyst regulation. So they ensure, or maybe to correlate something like an internal auditor. So what do they ensure the compliance officer is? They ensure all the compliances, all the regulations are being followed by the company. See, because again, the way we give a difference between like a concurrent auditor of a bank and a statutory auditor of a bank. As a statutory auditor of a bank, I have very limited scope to do. But as a concurrent auditor, I need to verify whether the fire extinguisher is working, whether if the washrooms are clean daily, whether the supervisor is signing it. So to that extent is where the responsibility of a concurrent auditor is. In the same way is where to the compliance officer. He needs to ensure right from even a agreement being signed, advice being provided, the references where I mentioned like that font size, the place at which those disclosures are to be provided. So it's the duty of the compliance officer to ensure all those required compliances are being followed, all the regulations are being complied with. So I, as an auditor, I need to comment based on, again, we can follow those audit procedures. So we can give reference to our standards of auditing, the auditing procedures which we need to follow. Based on that, we can do it. And again, we need to have a documentation of that based on how I provided this audit report, how I said whether this is compliant, partially compliant, or non-compliant. I need to have those things in place. So this is on the research analyst. So any questions we have?
No, we don't have any questions right now.
Okay. So next we get into the portfolio managers. Again, the number of portfolio managers are increasing, or even we could say the number of investors who are investing through portfolio managers are increasing. So we could have seen while doing IT filing. So one is thanks to AIS, is where we are able to see, okay, this client has a demat account, he has done so much of share transactions which I was completely unaware of. I need to ask these details. And we get to see the profit and loss statement issued by the portfolio managers, where they say this is a list of trades, this is the profit, this is the financial position, so much profit, so much of being bought, so much of the amount was received, this is towards management fees, this is towards brokerage, this is towards depository custodian fees, and this is the net profit which is being earned, and what is the capital gain being earned, whether it is on the mutual funds, whether on the equity shares, or whether on the debt funds. We get that complete bifurcation, right? So that's where we are able to see the number of people investing through the portfolio managers are increasing. So one, if I need to be a client of a portfolio manager, I need to have a minimum investment of 50 lakhs. Otherwise, portfolio manager cannot take me as a client at all in the first instance. So who can be a portfolio manager? It is a body corporate pursuant to a contract with a client who advises or directs or undertakes on behalf of the client the management or administration of a portfolio of security of goods or funds of the client. So what does the portfolio manager do? He asks, give me 50 lakhs. You give him 50 lakhs. Then he says, you invest this. He doesn't care of what your risk profiling is. He doesn't care of why you're making this investment. Do you have any financial goals? That's where portfolio managers doesn't get involved in. They will be able to say, this is my past performance. My past performance is 10% per annum, 12%, 14%, 15% per annum. And I have this scheme. What is this, or we could say investment approach. What does this approach say? I'll be investing in BSE 100, Nifty, NSE 50, or I'll be investing in blue chip equity funds. This is where the investment approach comes up with. So based on that, so this is only what as we could say as a fund document which a portfolio manager provides. He takes his amount, he executes those trades as per that, and he needs to report to you based on some frequencies, which we will in the later part of the presentation. So he decides best investment plan for an individual as per their income, designs customized investment solution for clients. If, say, a few portfolio managers invest in security, and to the extent of that, they also invest in options. So to the extent of to the underlying securities, underlying securities, you can invest in an option. That is something which is permitted by SEBI. If you want to do only, if a portfolio manager, if he wishes only to do in options, that is not allowed. So there are types of PMS. So one is a discretionary PMS, another one is a non-discretionary PMS. So what does a discretionary PMS do? Has complete control over the client's investments, buy and sell on behalf of the client. So it's generally, to give it reference to the practical world, these PMS generally have a pool account. Say he has 10 clients, 50 lakhs invested by each client, and he has a total of 5 crores. So if he needs to execute a trade, say he executes a trade for 40 lakhs for buying a particular, say, security of Infosys, that 40 lakhs gets apportioned between all the four equally, 4 lakhs, 4 lakhs, 4 lakhs, 4 lakhs. That is something what a pool account does. That's a facility which a broker provides to the PMS. In the discretionary, PMS has a complete control, complete say on what to buy, when to buy, what to sell, and when to sell, and at what price to buy and what price to sell. What happens in a non-discretionary is like a advisor or an investment advisor or a financial advisor. They advise you to say you invest so much in this particular security at this price. It's up to the decision of the client whether he wants to buy or sell. So I as a PMS can execute that only after I obtain the approval from the client. So buy and sell only after approval of the client. Excuse. So something important here which we need to know here is ownership will be in the name of the client itself, in the name of the investor itself. Here the PMS, what he does is the execution. He just for his strategy, for his business, he needs to execute it. Otherwise, he will not be able to deliver that return. So PMS executes, but the ownership will be still with the client. So we can see when does the ownership, in what scenarios ownership is not with the investor or the client. In case of AIFs, mutual funds, or the AMCs, is where they invest money in that particular fund, and the investor get the units of that particular fund. So, and it's up to the fund manager decides where he wants to invest, how he wants to invest. He has a amount fund pulled in one account and he takes a call. Do I as a investor have a decision taking authority saying, I have invested 50 lakhs in this mutual fund and I dictate the fund manager, no, you can't invest in this particular security. No, I can't do that. The complete control on the execution of the fund is with the fund manager there. Here, the fund is being pulled. At the end of the day, I get my units. The valuation is where we have seen the NAV. Based on if the value of the fund increases, my NAV increases. The value of fund decreases, my fund NAV decreases. So coming back, PMS, he only executes, the ownership will be still with the client. It's a pool account. If it's in a pool account, still the ownership is with the client. Any buy or any sell goes proportionately to each of those respective clients or respective individuals. So what is the criteria? So it has to be a body corporate. Say, I as an individual, can I be a PMS? No, I cannot be a PMS. So what is the net worth? Earlier we had 50 lakhs in investment advisor, 25 lakhs in research analyst. Here we need to have 5 crores. 5 crores of paid up capital. Again, the definition of net worth is being defined in the PMS regulation. So in case, since it's a body corporate, I hire an employee who acts as a fund manager. That's the principal officer. So again, there are requirement of a qualification. He needs to have a professional qualification. professional degree or a diploma or a CFA charter. And also he needs to have a 5 years experience in security market with minimum 2 years at portfolio management and investment advisory services. See, one of the example where today people take is, I worked as a mutual fund distributor. So even as a mutual fund distributor, what I do, I research on those particular funds. I advise where that particular, I see where those particular funds are investing. Also see what is the performance of those sector. Then I comment whether this fund is suitable for you or not. See, if you want to invest in five years, I advise on a particular fund. If you want to invest for 2 years, it's a separate fund. If you want to invest in 10 years, it's a separate fund. So I do that research. I have that experience as a mutual fund distributor. I have those in the financial markets of 10 years. So can that be considered as the work experience for PMS? No. Why? Because we need to have a minimum 2 years at portfolio management or investment advisory. Say I should have worked at 2 years with any investment advisor or a company is registered as an investment advisor or who was a portfolio manager. Say 5 years I have experience of research analyst. Can that be considered? Still no, because of the criteria of minimum 2 years in PMS or investment advisory. And what is the certification I should have? NISM 21B. So 21, ideally we have A and B. If I'm a distributor of NISM, I need to have a 21E. If I need to be a fund manager, I need to have 21B. So going back to again the investment advisor, say this particular investment advisor has a family office. So they consolidate all their investments and advise where you need to invest. So one could be also as a PMS product. So if I need to advise this particular PM or this investor to invest in this particular PMS, one, I can just tell him and he voluntarily does it. But if I need to get the real-time update on what is the fund performance, whether this particular investor is getting any money, getting any dividends, what are those charges being charged by the PMS to that particular client of mine, if I need to know, then I need to be a distributor. So what happens there? Again, we have a concept of either you invest through direct code or regular code. If I invest in a direct code, I don't get any commission. I charge fee to the client. If I go to the regular code, I get payout from the fund managers or from the PMS houses. So again, those people need to have a certification program or NISM 21B. Say if I am just a mutual fund distributor, do I need to have a NISM? Yes, there's a separate certification. I think it is NISM 5, not very sure. I need to have a separate certification obtained in a NISM. Otherwise, I will not be eligible to get the registration with AMFI. That is the Association of Mutual Fund India. So here, who is a principal officer? So the definition of principal officer in investment advisor regulation is different from the definition in a PMS. So there it was a managing director, designated director, or in the management who takes decision in the financial and operational. But what in PMS? PMS, it's an employee of portfolio manager who has been designated as a portfolio manager. Just the designation as a portfolio manager does suffice? No. But also is responsible for decisions made by portfolio manager for the management or administration of portfolio of securities or the funds of the client and all the operations of portfolio manager. Say I have the designation of portfolio manager, but all the decisions are taken by some director. Is that allowed? No. I need to take the decision of how those securities are to be invested or the fund has to be invested. I need to take those decisions. I am responsible for all the operations. So here comes the authority and responsibility. Just an authority will not work, just a responsibility will not work. Both authority and responsibility should be with that person to call himself as a principal officer. Can there be a portfolio manager without principal officer? No. All the portfolio managers need to have a principal officer. So the number of compliances in case of a portfolio manager is quite more. Why more? Because we have seen the minimum investment which a investor or the client needs to make through a portfolio manager is 50 lakhs. So much of public money being handled. And we have seen in the very early slides on the amount of assets under management in PMS. If I'm not wrong, I recall somewhere around 29 lakh crores. If such an amount is being with the ownership of those PMS, then so much of compliance is needed. See, we have seen with the banks, the number of compliances which they need to do, SLR, CRR, which they need to maintain at, I think, by monthly frequencies, the number of reportings which they need to submit to RBI, the concurrent audits, the system audits, the statutory audits, whatnot. Why there are so many compliances, so many audits? Because there is public money involved. We have seen the case of very recently in case of US where Silicon Valley Bank, First Republic Bank went into a toss. Were there frauds? No, there were no frauds. But the issue was they had invested in long-term products, HTM, held to maturity products. If they had to sell immediately, they had to sell it at a huge discount to meet the current demand requirements. That's where we need to complement RBI today. They say so much of the funds you need to have reserve funds, SLR, CRR, so much should be there for CRR to meet your, say, in case your depositor as for immediate requirement of funds. This is where we have could say, a good system from the regulators. The same with SEBI. Again, SEBI is strict because with the public money involved. Take the example of Carvi, where the ownerships were allotted late or were not allotted. They had huge money being, investors' money being at stake. Or even in case of Franklin Templeton, debt funds, where the fund manager who had his, or his relatives who had his investments withdrew before so that he could liquidate his funds and others got stuck. And even today, they are receiving the amounts which they have invested in a partial basis, like the EMI or monthly, you're receiving monthly or quarterly some amount. So with so much of public money in stake, the level of the seriously or the level of compliances would be very much tougher. One, they need to obtain net worth certificate every year. The net worth certificate has to be obtained within 60 days from the end of the year, that is 30th May and not 30th September. So they need to obtain net worth certificate. Then they need to obtain certificate on compliance of PMS regulations. So here, till now, we didn't get into the detail. So just a brief or outlook on what these PMS regulations say. The regulations say that a fund manager need to have a investment approach. The investment approach says, where do you want to invest? That's saying, where does the money gets invested? What type of securities? What is the management fees charged? Whether it's a initial fees charge or at the time of exit, is there any exit load? Is there any performance being charged, fees charged? Say if the performance more than 10%, I charge so much. If the performance more than 20%, I charge so much. And at what frequencies is where the management fees will be charged? And what are the other type of charges associated with that? So these things have to be completely detailed in a investment approach document, or even in case of a agreement with the client. Once that is done, then the PMS needs to ensure whether the securities of the ownership is with the client, whether the dividends which are paid from the company are being credited to the client, the brokerages are charged accordingly. Because generally there would be a couple of investment approaches run by each of these PMS. Whether there is no cross cross-holding of one investment in other fund. If the same client has invested in two different approaches and where there is no movement of one money in one fund to other fund, these are the set of compliances which PMS needs to comply with. Apart from this, all these intermediaries which they need to comply in, even say in case of a website is, they need to say, have they received any compliance in the beginning of the month? If they have received, are those being resolved? What are the status of it? So it's like opening balances, current month compliance, current month resolved, and closing compliance unresolved. They need to update monthly. It has to be updated in their websites. So here complaints, you may say, okay, they may say they have not received a complaint, but they actually have, might have received. So there is a portal called Scores, where today I and you as an investor can register a complaint against any of these intermediaries if you have faced any non-compliance from them, or if you are cheated by them, or if there are terms of agreement which is being mentioned and where the intermediary is in deviation or non-compliance of those terms. So in these cases they can register in Scores. So I as a intermediary need to say how much I have been registered in Scores in this month, previous 1 year, previous 2 years, or from past 3 years, what is being there. Also, I need to publish investor charter. So what does the investor charter say? Investment in security markets are subject to risk. What type of risk? Risk in whether it's risk of losing the return, risk of losing the capital, the interest rate risk, all those things would be mentioned in the investor charter. Again, all these things to ensure that investor is aware of for what he's getting into. Because tomorrow investor cannot just say, I was not told by in this particular intermediary on these things. Just to ensure that there are no miscommunications happening, there are no false promises being happening, which have been happened in past. SEBI says publish these in the website. Investors are required to be aware of. And there is another compliance report which the PMS needs to submit within 30th April is a guideline. So there was a guidelines issued on 20th of April on the performances, how they need to report, whether those guidelines are in requirement with the regulation. Then we have firm level performance. So typically what happens in PMS is they report monthly to SEBI within 7 days of the month, within 7 days from the end of the month. So that is something which happens voluntarily. Something like to say, assuming we had the certifications of 9C where we still had to certify. So it's like monthly client used to file the monthly returns. At the end of the year, I as a practicing CA, used to certify whether the turnover, the tax liabilities, the inputs are correct or not. In the same way, I need to comment here as the auditor whether whatever they have disclosed are correct in each of those months. So again here, what has to be disclosed? There are pre-described formats with and giving explanation what information has to go in which particular column. So it's on a broader view, it mainly covers on what is the amount of funds in the opening of the month, additional inflow, what are being withdrawn, what is the closing, and they would be having a couple of schemes or the investment approaches, how much of the fund in each investment approach, how many investors are there in each of the investment approaches, are there any dividends, and what is the cash flow, how many numbers of discretionary clients and non-discretionary clients are there. So those are things which PMS reports on a monthly basis. This has to be audited, saying whether it's there or not, complied on an annual basis. So I as auditor need to verify whether each of those months are being complied with. So on monthly, apart from this, the another requirement from SEBI today is they need to disclose the benchmark reporting, which is made applicable only from 1st of April 2023. So APMI, Association of Portfolio Managers India, notifies various benchmarks. Say if it is an equity, Nifty 50, BSE 200, If it is a debt fund, they have taken few parameters. If it's a multi-asset products, they have few taken parameters and this is a benchmark. Say under equity, they have 3 benchmarks and one benchmark says for this particular month, it is 11% rate of return. So when I'm reporting to SEBI on the monthly reporting, I need to give the comparison. See, this is a benchmark for which I had selected 11%. My performance is 10%. My performance is 11.5%. I'm performing more than my benchmark or less than my benchmark. So there are a few challenges today which the PMS is facing is whether which particular, there are 3 categories in an investment approach which which SEBI has notified, but I don't completely fit in any one of those. So this is something is where we as a consultants and they as with their business knowledge need to take a decision and select any one of those particular categories or the approaches. So when I select that, I need to give a justification saying why that particular category is being selected. So this is what I report to within 7 days of the month. Then something report to the client, I can do it monthly, or something which has been notified now is to report within 10 days from the end of the quarter. So something which I need to report quarterly. So that's where we get into detail of how much money was invested, how much money was traded, the profits earned, what is unrealized profit, how much is the appreciation in the investment amount. Those are the details which get into detail. Also, we have today internal audit which is being to be done. The timeline, it is something which is not prescribed. So internal audit again by a CA or a company secretary. So what do we do in the internal audit? We need to check the controls. So again, here when we say control, to say, okay, this fund, once a investor comes in, he executes an agreement, he invests money, and whether this is going into this full account. Once he executes a trade, whether that is getting credited to him, whether the dividend is getting credited to him, all these things is where the internal controls goes in. And all these things is something which has to be certified by a chartered accountant or a company secretary. So now we get into the comparison between investment advisor, research analyst, and a portfolio manager. So any doubts till now on the portfolio managers? Any questions raised?
We have one question.
Just a minute.
It is regarding disclosure about disciplinary action, history of analyst. Do we really expect the research analyst to make honest disclosure without third-party attestation of the same? How will investor clients safeguard themselves to avoid analysts with adverse history?
Yeah, see in the research report, he may not mention, but while we are giving the compliance audit, so as an auditor or as a third party, that's where we need to come and saying this is not being complied by this particular research analyst. So that's where the maker checker comes into the picture. I agree, the checker thing doesn't happen immediately, but happens at the end of the year or after the completion of the year.
That's all from the question side, right?
Yeah. So then let's compare between investment advisor, research analyst, and a portfolio manager. Risk profiling basically understand what my risk appetite is. Only investment advisor is required to do. Research analyst is not required to do, and PMS is also not required to do. Execute on behalf of the client. As an advisor, as a research analyst, I cannot do, and as a PMS, I can do. Under discretionary, I do it myself, and on a non-discretionary, I obtain the approval. So you may say, but implementation and execution service which is being permitted by the regulation. So execution for an investment advisor should be a S. Here the difference is he can provide an execution service, but he cannot execute. Say if you need to submit some document to AFC to invest or to transfer or to redeem some particular fund, he can give you those documents, ask you to sign, submit it to the AMC. Or if he has a platform, as you as a client to go and click, 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 and this trade gets executed. That is something allowed. That is basically to say facilitate the execution. And you can, as an advisor, I cannot execute on behalf of a client. I cannot say, I cannot take a power of attorney from the client and I sell or I buy securities. That is not allowed. That's allowed only in case of a PMS. What are the type of securities? Equity products is allowed for all the three. Debt products, any securities is allowed by all the three. Say if I want to invest in a FD, research analyst, I don't think he can allow, and PMS won't get into that. Most likely PMS will be with the equity funds, equity shares, and derivatives to the extent for the only for the purpose of hedging. So comprehensive financial planning, only an investment advisor can do. That's where he gets to understand what is your financial goals, what is your investment objective, when do you need money, how much do you need money, what are your dependents, what is your income, are there any medical costs involved for you, are there any loans. That's only where the investment advisor comes in. As a research analyst and as a PMS, I cannot do. So what if as a PMS I want to do that, then it would be like you take up the investment advisor registration and provide that service. Can I pool funds? No, in all the three cases. As I said, in case of PMS, he cannot pool funds. There will be a separate pool account. And the ownership will be in the name of the respective investors or the clients. Only in case of a mutual fund or a venture capitalist or the alternate investment funds where the funds are pooled and the ownership is not in the name of the individual investor. What does the individual investor have? In those cases is the units. What are the net worth requirements? 5 lakh individual, 50 lakh for non-individual in case of investment advisor. Case of a research analyst is 1 lakh for individual, 25 lakh for non-individual. And PMS, it's a flat 5 crores. And is there a minimum investment amount which has to be there if any of these intermediaries needs to take in as a client? Only PMS has a requirement of 50 lakhs. And for all other two intermediaries, there is no minimum investment amount as such. So for again, PMS, it was 25 lakhs earlier. I think from past 2 years is where it has been increased to 50 lakhs. So when you see the cost of advice, PMS is bet on a higher end. Reason? They say they will give you so much of this is the performance. They will earn more profits. The moment they earn more profits, they charge more of the management fees. That's the reason is where the cost of advice is more. The risk is more, return is more, and the cost is also more. In case of research analyst, it's very low because that's a common recommendation. Say if you are providing buy this particular security at this price. If you're giving that, you're giving for all your 1,000 clients the same recommendation. But in case of an investment advisor, I cannot do that. Because whether all those 1,000 clients fit in that particular investment objective, risk profiling, that suitability which I have done, do they fit in? If yes, I can go ahead. Otherwise, it has to be customized. That's where we could see the cost of advice in case of an investment advisor may be a bit higher than a research analyst. So typically, investment advisor relies on the recommendations or research report published by research analyst, and based on that, he may give a report or he may give a advice to the client. Or he says, you have so much money. I am not a person where I am good at equity markets. I recommend you to invest in this PMS fund for whatever reasons. Then I advise him to invest on a PMS product. So this is where, again, I'm not investing there. I'm just advising to invest there. So that's where my cost of advice would be lesser than compared to the PMS. Because again, the client needs to pay fee to the management fee to the PMS. Then sharing of profits allowed only in case of PMS and not allowed in case of investment advisor and research analyst. So we have a concept of accredited investors, which have been borrowed from the West, and even we have this concept of accredited investors in Singapore. So suppose if I have so much, say I think more than 50 lakhs or 1 crore of income and investment in financial securities of so much amount, then I can be called as an accredited investor. Then I can be a client of a PMS even for 20 lakhs. I say to PMS, I want to test out. I want to see how much performance will you be able to give, then I'll invest more. So PMS will be able to take me as a client. See, even in case of sharing of profits, which is a bit debatable, even in case of an investment advisor, if I'm an accredited investor, I could say if I am able to earn more profits, I will be able to pay so much of my fees. So this is where the concept of accredited investors are being introduced. So the concept of accredited investors is something that where those set of people are aware of the financial markets, financial products, the risk associated in the financial investments, and they're those type of person who are able to risk their capital amounts. So that's where SEBI has given relaxation for those set of people. For retail investors, SEBI is safeguarding them so that they are not given false promises. They are not given false recommendations. Just to ensure the safeguard of the investors, safeguard of the entire ecosystem is where the regulations are being tightened. So then we will get into the avenues for CAs which are available in this particular intermediaries. The compliance services were here for the awareness purpose, where I have added the broker and the EAFs. So monthly, there is no certifications required in any of these intermediaries, but half yearly is where internal audit is required for a broker as per stock exchange regulation. Say if he is registered with BSE, NSE, and NSDL, then he needs to get it audited as per BSE regulations, NSE, I mean the bylaws of BSE, bylaws of NSE, and as per the depository, as per the NSDL. So he needs to get 3 audits done, and it's every half year. And apart from that, anyways, there is a of review which is there. See, as I said, here in this sector or in this business, the cost of non-compliance is very high. The cost of non-compliance is a penalty which leads to a damage of your reputation in the market, and wherein clients may not be comfortable. See, if I have a client with any of the investment advisor and he is levied penalty, I mean, I will not be comfortable to work with that particular investment advisor, continuing with him. Because I'm not sure if I get an opinion, okay, if there are some other non-compliances which are not been identified, why to risk? Because this is my hard-earned money. So in the same way is where we get an advantage, where the clients want to be in compliant with these regulations. So they are ready to pay the cost for the compliances. That's the opportunity is where, as a practicing professionals, we can look at. As a yearly, so for an investment advisor, he needs to get a compliance audit done as per the SEBI regulation, and he also needs to obtain a client level segregation certificate from the statutory auditor. So this client level segregation is something which, as I mentioned earlier on, say a full family has to be under advisory service or under distribution service. If husband is working, wife is working, both have their independent source of income, then I can have them segregated. One is separate advisory and distribution. So this is something which the statutory auditor needs to give it. For a research analyst, it's the normal compliance audit. Then for a PMS, it's a compliance audit, net worth certificate, internal audit, performance reporting at the firm level, then audit of financial statement of each of these clients. So these are the opportunities which as a CA, which I practicing professional, which I can get. So internal audit, as I mentioned earlier, on the internal process, whether all the processes are being complied, all the regulations are being complied. Then I have performance reporting at firm level. So whatever they have reported at each investment approach monthly to SEBI voluntarily, whether that is being appropriate, I need to audit that. So as a compliance service, I can be able to give as on a monthly service. Say I review it. Then we have seen these financial statements audited, right? So what do we to pick, saying the balance sheet, the PL, the list of trades, the list of holdings, which the PMS gives. Again, these are system generated. I, as a CA, needs to certify whether those reports certified generated for each of the clients are correct or not. So these are the avenues for CAs, which we can claim for. Then for a broker, it's a compliance audit and a system audit. So as I mentioned earlier, now for a NSE has said for an internal auditor, he needs to have a DISA qualified. So the level of technology coming into the picture is making more tougher for the regulator to ensure there is actual flow of money. Whether if I am a seller, am I getting the money? Am I getting complete money, or am I getting the money the day when I am supposed to? It can't be a carryover. I get it tomorrow. There is no lag in the receipt of money, or there cannot be any delay in the deduction of money from my demat account if I want to purchase. So another notably which SEBI is coming up with this ASBA facility, which we have only at the time of IPO. So at the time of IPO, the money gets freezed from my savings account. It doesn't move to my demat account. So similarly, SEBI is planning to bring it for a secondary market as well. So if I want to make purchases, say of SBI 100 shares, I need 3 lakh rupees. So I can just, that amount gets freeze from my savings account and doesn't move from my savings account to my demat account. So by this, so that SEBI is ensuring there is no other, again, a repetitive case of where broker is mismanaging the funds. The funds of one client is not linked to the other client. So to ensure these things come down, SEBI is ensuring to bring in these measures. For AF, it's one, the compliance audit comes into the picture, then audit of a pre-placement memorandum. So anytime AAF is raising funds, they need to issue a pre-placement memorandum. And so they need to, as an auditor, I need to audit it. So coming to the last, what are the areas of expertise required? So this is in terms of advisory, audit, litigation in all these regulations. So one is a SEBI regulation, then FEMA. Why do I say FEMA? Because what happens typically in these clients is they would be NRIs who are investing in a PMS fund, or where he's a client of a NRI, of a investment advisor. So in those scenarios is where the FEMA, as a CA, we can advise them on the FEMA regulation. So saying if I need to receive investments in this money from foreign for this particular, this is a compliance which we need to follow. Or from, I think from September last year is where we saw overseas investment regulations. Is where restrictions were brought in. If you're, I think if you're investing more than 10% in any company, then you need to follow some compliances. You need to collect share certificates and give it to the bank, which typically banks are doing it today. But we as a CA, we can advise them on what, if they need to take this decision, these are the set of compliances which they come up for. Because as I said, if a client is ready to pay advisory fee, then he'll be ready to pay for these costs. Then the traditional of taxation, direct and indirect, the fund management, if we want to get into the industry, as if taking one of the questions raised earlier, what are the opportunities available for semi-retired CS? See, if I have this experience, maybe fund management or fund accounting, what happens in case of mutual funds or the PMS? They have their front office, back office, mid office, separate applications to do that. What happens in case of AIFs? There are very few vendors in place, and most of the things are done through Excel. So this is one of the venues where, as CA, we can look at fund accounting. Then as a research analyst, if you want to get into that side of business, or as a investment banker, in case of investment banking, we can get into that mode. Or in case of information technology, as I mentioned, DISA, which has been mandated for brokers to become the internal auditors, or to say even these regulations are being complied. Say if I take the example of investment advisor, where we saw one of those videos where you say your income is 80,000, expense is 40,000, yes, these are the goals, and this is the output. So if I need to say, okay, this is okay, can I certify saying all the SEBI regulations are met? No. I need to get into the system to understand, okay, if I try out other combination, whether the end results are changing, whether the final recommendations are changing, whether my risk appetite or the risk tolerance or the risk assessment which the report is giving is getting changed. So to check these things is where I need to understand technology to be an auditor. Or if I need to act as a consultant, I can advise them on how these platforms are to be used, what are the parameters, what are the criteria are to be used. Then we have drafting of agreements. As I said, SEBI mandates what are the terms of to be mentioned in the agreement. So does the job end there? No, there could be like, say, addendums to those agreements, annexures to those agreements, which would be required from case to case basis. So these are the things which is like the ongoing. Those intermediaries come across new type of transactions, require changes in those agreements, or to be made few changes in the agreements, amendments in the agreements. So that's where we can work with them. Again, on the preparation of financial statements, this is one of our core practice where we look at the audit, statutory audit, income tax audit, preparation of financial statements, which is something which it comes to us. Yeah. So do we have any final questions?
Yes, we do have. Is there a SEBI approved contract to be executed by the client with the PMS setting out responsibilities of each party and means of grievance redressal?
Yeah. SEBI has mentioned what are the minimum terms to be mentioned in the agreement. Over and above, it can be other terms which you want to add it as per the business needs. So any deviations here would be required to be highlighted by the compliance officer or during the compliance audit.
Okay, the next question is, cost of advice. Does the SEBI prescribe percentage or range of percentage of charge that can be collected by IA, RA, PMS?
Yeah. So in case of a investment advisor, they have prescribed this is at the option of the advisor. See, there are two things. So to select whether he wants to opt advisor or distribution, clients needs to select whether how much to charge. It's at the discretion of the advisor. Say it can be either 1.5 lakhs per annum, or it can be maximum of 2.5% of the AUM. And even SEBI says what is a percentage at which, or what is a frequency. So the frequency at which you can collect is a maximum of 6 months in advance. You cannot collect, say, in the client has onboarded, I collect lump sum now for the entire year or entire 2 years. That's not allowed. Only for a period of 6 months you can collect it now. And suppose if the client terminates the agreement, he wants to say, no, I'm not happy with your service, and if he wants to live, then after 3 months, then I need to refund the fee for the 3 months. I am liable to refund. And these things would be required to be mentioned in the agreement per se. I cannot just say, okay, no, the fees which I collected is for 3 months for this services. I cannot say that, because upright we need to mention what are the terms of fees which I am collecting. So in case of a RA, currently it's mentioned that it has to be reasonable. In case of a PMS, there is a bit flexibility given. Based on the performance, it's between the client and the fund manager where they can negotiate.
With mandatory compliance audit prevailing, how did Karvi manage to mix up clients' money with own, causing loss to client and adverse action by SEBI? Can you explain the factual position as known by you?
See, that's where I think SEBI is learning from the experiences. So that's where one of the reason where we can see system audit is mandated for the intermediaries. See, as in when few things, see, again, SEBI, I think Karvi came out again around 4 or 5 years back or much more older. So that's where the importance of technology was not much realized. So, in fact, to see today, much of the circulars or the notice, or any changes in any of most of these regulations of these intermediaries, may one of those source may be case of the Karvi. They have identified what are the type of lapses being done there. So based on that, they are fixing up in the regulations. So as we can say, few changes in Companies Act which has come up because of Satyam. We can say more few changes in the current regulatory because of Karvi. No, you're
That's
muted.
some questions, I think. We don't have any further questions. The stock market is a patient. So now we all have understood our roles because of the effort Sir has put in. The way Sir you have taken us through the topic is highly commendable. I, on behalf of ICAI and CFMIP committee, take the pleasure to thank you for your valuable insights that you shared with our participants today. All good things have to come to an end, and so does this evening. But an end is beginning of next voice. On these lines and setting our benchmarks higher, let us pledge for a magnificent future progress for the country, led by some of our very own members. My sincere thanks to secretariats and entire team, our tech team for all the technical arrangements, without whose support we would not have had such a great evening. I, see Ashita Shah, sign off for the evening and wish you all a happy weekend. Thank you.